All right, good morning, guys. Sorry for the late start, having internet issues. We're gonna take a look at some FX pairs. We're gonna try to. I got the video recording. If I drop off, I'll just post it later. So yeah, a few things have been brought to my attention this morning, and I did lose track of time. So apologies for that. Mr. Bitcoin is not doing what we want it to do. Well, some of us. It's going down, right? We are into daily support. Let me get rid of the drawing so I can start from scratch. We have daily support setting right here at $46,166. You can see that we are getting a slight bounce from this area this morning. We tested this, but we did not break it. I did set the music down too low. If it's too loud, please let me know in the chat still. I did record it and listen, and I could barely hear it, so... All right, what we're looking for is just a small bounce, a sellable bounce more than likely. And the reason why I'm looking for potential shorts down here is because the last time we were down here, Bitcoin did not take out my target. My target is this swing low right there at $45,496.57. You can see here that before you got up there, you are starting, or before you got down there, you're starting to bounce. But these lows, I want to see these lows swept. And then if Bitcoin's going to make a run back to the upside, I give it permission to do so. Because it didn't take them out last time we were down here, right? Generally, the market will take out old swings and old swing highs and old swing lows, as that's where the liquidity rests inside of the market. Over each swing high and swing low are a ton of stops. Let me see what's going on here. Hopefully it catches up. It'll do what it does. It's all good. All right, so it's this swing low. This is the lowest swing low in this choppy price action that we had since this capitulation wick to the downside. This week has been not really a big range, right? See how small the range is? It is only Tuesday, so basically the week is just getting started. But we tested weekly support last week here, and we closed above, which is fantastic. The quarterly closed green, which is also a good thing. These are is about as bullish as you can get right now as far as signals go. I don't mean that Bitcoin's going to be bullish. I mean, those are the only two bullish signals that I've seen last week, and they're not exactly super bullish. The fact that you're closing back at support, and now this week's opening range, you pushed up just a little bit, and you're stretching out for the lows. So those are the targets. It's this weekly low. All right, it's the week of December the 13th. That low is my bearish target. Once that happens, if Bitcoin doesn't then bounce, come back up into the weekly area of resistance, and then start to head higher, my next downside target will be that wick low right there. So basically what I'm saying is if we sweep these weekly lows right here and then consolidate down here, and then I'm probably going to be targeting this area here for the next push lower. Now, the last time we did have a big sell-off in Bitcoin, it did pretty much the same thing. Big, massive downside candle, putting in a slight capitulation wick. And you can see here, 1, 2, 3, 4, 5 weeks later, it finally took out that low. And then you had a few more weeks of consolidation before the demand stepped back up in the market and pushed Bitcoin up into higher prices. There was also some good news here. Now, I'm kind of in the camp that Bitcoin, this move up basically was just to sweep these highs. And that's what we've done, right? Generally, if something is going to remain bullish, it's going to break out above all-time highs and start a short squeeze. A short squeeze is when stop losses, short sellers' stop losses start getting triggered. That propels more buying into the market. Stack that together with FOMO buying, and then you get just a massive bullish run. We didn't get that. What we got was a purge of the highs, and then boom, downside, and not just a little bit of downside, massive downside. 3 solid weeks of down, and then 4 solid weeks of consolidating around the lows. That's not uber bullish. That's not bullish. Bullishness is when you're making higher highs and higher lows. If you stretch this chart out, this chart is bullish, right? And it has been its entire life. But if you look at the yearly chart on the BLX index, there are 2 bearish years. So Bitcoin can have bearish years. We just started a new year, and monetary policy was announced to be something different, a complete 180-degree turn from the uber bullish monetary policy that we just had. So people need to really start thinking that this could potentially be Bitcoin's top. It really needs to be discussed, and nobody's discussing it. In fact, everybody is talking about more bullish stuff, and they're just not seeing the downside, and they need to, because Bitcoin has repeated the same process every single year since its inception, right? You have a halving, then you have a bullish push, you have a blow off top, or it doesn't even have to be a blow off top. You just put in a top, right? The BLX index, you guys have seen it 1,000 times. I'll pull it up real quick. I don't want to beat this dead horse much longer, but it's very important. Let me see, where is it at? There. All right. So this is your Bitcoin market cycle chart since its inception, since Bitcoin was a beginning new asset. Every time you have a halving, you have a bullish push, you have a bear market. Same scenario. You base out and you trade sideways up into the next halving, bullish rip, bear market cycle commences. We did that exactly the same time, or the same way this time as well. Trading sideways, bullish pop, boom. And it's December. Both of these previous tops happened in December. Okay? We had December, we had a push lower. I am not saying that Bitcoin cannot go higher. It's about buyers and sellers. All right. I know Bitcoin's different, and that you know, with the blocks, the mining blocks and all of that stuff can absolutely and will absolutely have an effect on Bitcoin's price. But what you absolutely need is demand. The block miners is supposed to put that demand under Bitcoin, but you also need legitimate buyers. Right now, you're seeing a lot of legitimate selling, not buying. This is selling. Now, we are into weekly support down here. So even if we do sweep this low and take it out, it does not mean that you're going to see lower prices. It can find support once again. All we can do as traders is we can mark these potential areas where we know there could potentially be support, and we can take trade entries or buy stuff there. Whether it works or not, that's up to the markets. It's not up to us. Nobody knows if Bitcoin is going to go higher. Nobody knows if Bitcoin is going to go lower. But with all the evidence that we have in front of us, then you know what? I'm going to play it safe. I'm going to say that there's a huge chance that the top is already in. And I will look to take a massive short position at the $55,000 area if Bitcoin ever gets back up there. And I'll show you why here. I did discuss this in a video Saturday, but we'll talk about it a little bit more. So here is an old supply zone. It's a 2-week supply zone. We know that we know that there's not much demand above $60,000 because Bitcoin has not been able to get a bullish push above $60,000. It has not been able to squeeze the shorts, and you have not had enough or more buying coming into the market, right? That's what's going to take to propel Bitcoin up to new all-time highs and beyond. You must have a lot of buying coming into the market. We're not seeing that. It's a new year. A lot of things are changing, so you have to focus and pay attention to this stuff. Bitcoin only had 2 weekly bullish closes above this supply zone. Then it fell. The reason I want to look for that to potentially hold as resistance if Bitcoin trades back up into it is because it held a support here. So this shows us that this area, $55,781 price point, is an area at which a 2-week candle respected the low. Now, it did break down the next session or the next 2-week period, but you have not been back to test that. If you go into the daily chart, you can see it a lot easier. Right here we are. This is your daily chart. This is that 2-week level that I was talking about. There's a daily close below it. Price trades back up into it, respects daily resistance, 1, 2, 3 days. There is your breakdown right there. You did not come back and retest that level. So this is the level at which I want to potentially look to get short. I'm not just going to throw out sell orders there. I'm not just going to blindly throw out a bunch of sell limits there. I want to make sure if price gets up there, that area holds as resistance. I want to see that offer up the resistance. Then I will take the position short, looking for a bear market in Bitcoin. If we push up above this level and get above $60,000 and maintain that bullish price action that we need to see, then I will have bullish upside targets. Okay? 60K. That's the key for me. Needs to get above that. 2-week close above $60,000. I'll start looking for bullish price targets. But until then, I'm going to basically just scalp intraday ranges until we get back up here. And this will be a position trade for me, essentially. Looking for Bitcoin to roll over and then find a bear market low and trade sideways and choppy all the way up until May or March of 2024, which is when the next halving occurs. And then I will become a buyer on Bitcoin again. So right now, instead of accumulating, which I technically am accumulating because when I short Bitcoin, I'm shorting it on an inverse swap contract, using Bitcoin to short Bitcoin to make more Bitcoin. Or if I'm wrong on a trade, lose more Bitcoin, right? That's what I'm doing. So essentially I'm accumulating on the way down. That just means I am super bullish long term, right? I've essentially, my position is the same as if I just bought the stock long and are selling puts. That's as long as you can get, all right? As long as you can get. So we'll see what happens. But right now I am looking for that swing low, that weekly swing low to be pushed, for price to push down into and take those out. I looked on every time frame chart as far down as I could get. I cannot find, there is no support or resistance in this wick. It happened very, very quickly. So that is the main support, right? And then your weekly level, but unfortunately you're below your weekly support. And there is no weekly demand zone in this price action here. There is a 2-week demand zone though that is in the price action. And that's here. This is the level at which we got long on, and we got profits all the way up in this move here, this candle. But now we have completely traded back down and retested that level again. So I am looking for this level to possibly break down. Next area of support is going to be down here at 43,178. If we lose this level, if we lose that demand zone of 46,027, then we will be targeting this. Now, that's the wick low that I'll be targeting, but I will expect Bitcoin to possibly find support here. Base out for a few weeks or so, and if it's going to continue to go lower, go lower. If it's going to go higher, go higher. I can't predict what it's going to do, so I have to wait for it to do it, so that way I can then base my trading decisions around that. All right? But it's definitely not bullish right now. Definitely not bullish right now. Last night or yesterday, we seen uber dollar strength. Let's go look at the dollar. We are seeing more bullish dollars today. All right, we are green on the day. Just barely, but you are green on the day. 0.03%. That means you are bullish. You are above the open. All right. Here was yesterday's big, extreme, massive bullish pop. If we go out to the daily chart and look at this here, you can see that you got above daily resistance. So far this morning, you have traded back down to daily resistance, respected it as daily resistance, and are now trading higher. At any point, this can change and the dollar can fall. I understand that. But right now, price is bullish, and we will be looking for more bullishness to continue on the DXY. Monetary policy that's about to happen should be bullish for the dollar. The rising of interest rates should be bullish on the dollar, right? Doesn't mean it will be, but it should be. Okay, so we're going to continue to look for bullish strength. The Fed has so much as came out and told us that. So that's what we need to prepare for. Whether or not the Fed can or will raise interest rates isn't up to us to decide. What is up to us to decide is what has the Fed said, because what the Fed has said, other market participants are going to adjust their P&L for that, or adjust their portfolios for what the Fed is planning. Obviously, my cat Pepe is hanging out with us. All right, so dollar strength. We're going to continue to look for dollar strength. I was looking on last week for the euro to sweep these highs. It did that. It was choppy last week. It was real difficult to trade. Yesterday, we had a push lower taking out support, multiple support zones, 2 of them there. Retested that, so we're probably going to be looking for short side continuation on the euro. The current near-term bearish target is 1.12738. The problem with that target, well, it's right at 20 pips, so I guess it is a legit move we could potentially look for. Let's go out here to the hourly and see what's what. So basically when I do this intraday stuff, I am just looking for intraday resistance, and right now we have hourly res setting at 1.13067. I want to know where my open of the day is, because that's going to determine whether or not this asset is bullish or bearish on the day. All right, here is your London open candle. You can see that it put in a low, not a fresh new low, but it got close to taking out the low of day. So the low of day would be my target, right? That would be my near-term target. Secondary target would be that low over here. First near-term target, low of day. Secondary target, this swing low. So we'll see what happens. Big bullish pop, but that's okay. Did not take out resistance. So what we'll do coming closer into the New York session is we will watch this hourly level here and see if price is closing hourlies above it. If we're still closing hourlies below 1.13067, I'm going to look to take a short targeting the daily low. Your pound dollar is bullish on the day. All right, pound dollar had a lot of bearishness yesterday. That's, to be expected with bearish dollar. You can see on the pound, though, you did sweep some lows. I didn't quite see that on the euro. No, you didn't. So the secondary target I have on euro is still intact. Secondary target on pound has been taken out. There it is. So I'm going to leave pound alone. Can it be bearish? It can, but all the metrics that we would use for potentially taking a short position have been broken, meaning we got an hourly close above hourly Heath level or hourly supply. So since that hourly closed above the supply zone, it makes the trade a little bit less probable, right? Just a little bit, because it's showing a sign of bullish strength. Baby, I understand you're hungry. You're just going to have to wait. Please. Chill out. Here, give me 1 second. All right. Go tell her about it. All right. Little rascal. He's spoiled. I tell you that. He gets his way. All right. So, yeah, we're not going to look to try to get short the pound. It is inherently weak, but it has been it has been strong as of late. Let me see here. Where is this? All right. So yeah, basically you set new yearly lows in on the pound, and then you've gotten a bullish bounce. That's to be expected. It's always to be expected. New yearly lows. It's a big level. You can throw a trend line up here. I'm not very big on trend lines, guys. I will use them, but I don't use them as resistance or support. I use price levels as resistance and support. Price is king, always. But you can see on the quarterly chart here, you were unable to get above that on the pound on log scale, but you got above it on this. So I guess no matter how, it just depends on how you want to look at it or not, right? But if we don't use that, we can simply use old resistance here, right? That's old quarterly resistance, and it's still holding. So you came up into an area of resistance, it held, now you're trading lower. There is potential support where it is. This is why you got a bounce, okay? Traded down into potential support, which was old resistance on a quarterly level. Traded down into it, you got a bounce, you closed last quarter bullish. Since then, you have tested quarter support, and you're trading away from it. And this is what it looks like. There's quarterly support. You tested it yesterday, multiple days, you're trading away from it. Now, this is going to be the thing. There is a daily supply zone there at 1.35006. If price gets back underneath of that, then potentially you could look for shorts. But, I mean, that was a big bearish candle yesterday. So, generally when you see big moves like that, you will at least get a little bit of continuation. But you won't know if that level's holding until the close of the day. So if you don't want to wait for the close of the day, you can watch a 4-hour for a 4-hour rejection or something. You can see here, this is a bullish 4-hour candle closed on the highs, on the high of the candle, not the high day. So this candle needs to engulf this for a bearishness to ensue. You can see that this trend is obviously bullish on a 4-hour time frame. All right. You did break down, though, yesterday. So watch 4-hour resistance. It's as simple as that. If it holds, then maybe you can look for shorts. I just don't want to short into that big bullish pop. Now, usually in downtrends, these are shortable events because pops in price will usually get sold back into. But this is an uptrend, just a near-term uptrend. So we don't necessarily want to try to get short in front of that. I think you'd have better luck looking at something weaker like this, for instance. But this looks like it's already making its move. So we might have missed this trade. But we will keep it on watch nonetheless. NZD-CAD looks like it's chopping around sideways. We'll let it keep doing its thing. Multiple days sideways. So taking a position here is just basically taking a position inside of the middle of a choppy range. Not very productive nor profitable. So we got to wait for this thing to get out of the range. So that way we can then make better trading decisions. I don't see anything else on this one. Let me go look at Aussie Yen, because Aussie Yen came off hard the other day, but getting a big bullish pop now. What is that level? Let's see if I can find it on the daily. It is a daily demand. Big bearish engulfing candle straight down into daily demand here. Seeing a bullish pop. Daily support is there. And then you also have daily supply here. So it's trading above supply. And you're making higher closes on your hourly candle. So it's up almost 0.73%. So it's almost up a whole percent today. Not looking to short something that's up almost a whole percent. That's trying to get short. But I'm not going to get long it either. Because the 73%, or not 73, 0.73%, 0.7% on Forex is a big move. So you're potentially trying to buy the highs if you're trying to get long right now, right? For the daily range. So maybe it can be shorted. But here's old hourly support. That is currently holding as resistance. So this may be I don't know, man. We'll keep this one on watch too. Let me go over here and put this on watch. What do I got going on here? That's done. Keep that. Keep that. Keep that. Keep that. Get rid of that. All right. Aussie Yen. Oh. All right. There is that. So we'll keep Aussie Yen on watch. And we'll do a quick dive real quick and just do a very fast search. What else we might want to look at. So basically all I'm doing here when I'm looking at my watch list is I'm looking at the percentage gain or the percentage loss on the day. Anything close to zero I am interested in because that means it's in the middle of the daily range. And that gives us an opportunity to potentially look for entries. It doesn't always work out, but it just gives us an opportunity, right? This is not something I'm interested in. Has a big, massive bullish push. Here is the open. I mean, you're right at the open. So, I mean, does it go lower? It's possible. It's in an uptrend. Slight near-term uptrend. The Swiss franc has been extremely strong. So, this could just be a pullback looking on the bigger time frames. For a correction, right? This can absolutely be a potential spot to look to get short for a longer term trade. Basically what I would want to see though is I want to see it get back underneath this bullish breakout candle and take out the lows of that candle. If that occurs, then what I can then take from this is that there's a pretty good chance that it might head lower as it took out the bull trap. Any close above resistance is potentially a trap, but that has to occur first. So it's not going to be something that I'm interested in today. And then NZCAD we already talked about. NZD dollar, USDCNH. Let's go talk about that. So last week I discussed about maybe potentially looking for longs on this because the Chinese is going to, or China is discussing selling the yuan. So if they start selling the yuan, it's going to give it some weakness. If the dollar turns bullish and the yuan starts to turn around and get bearish, then this may be one of the best trades of the year for Forex because this has been just getting crushed. The dollar versus the Chinese yuan has been getting smoked. So, I mean, it is on the lows. I was talking about looking for potential bullish entries. You can see that you are trading above resistance today. There it is. So, a close above resistance today will look good. There's quite a bit of resistance up here. So, if you want to be safer, you can wait for it to break out of all of that stuff. But I'm going to look for bullish entries on it nonetheless, because I can take 2/3 of the position off on a day trade and essentially have a swing trade size position still on and just let that run if it wants to run. Obviously, I don't know when or if the yuan will be sold, but it is a potential, and just that potential gives us an opportunity, right? And then we'll go over here to the USDCNH. Oh, sorry, USDCNH. We're going to go look at the USD Turkish Lira. So we were looking for a bounce. We got that bounce. All right. I would not be looking for this to continue higher. I did bring it up last week that you could trade all the way back up to where you bounced and then fall. But something like this means that they're actually doing something. The government is doing something to their currency. When a government gets involved to stop the rising prices or the falling prices, then it becomes extremely volatile. So all I was looking for was a bounce, right? This was a massive move, the biggest ever. So I was expecting price to trade higher. It did. We are into resistance. I don't remember what resistance that is, though. Well, it's nothing. Hourly res. So we have hourly resistance there, and it held. Price trade up. There's a push lower. So this is a downtrend. If this continues to hold as resistance, then we can look for potential bearish entries, looking for the Turkish Lira to get their currency under control. But it's very, very risky. It's moving a lot. It's up 1.4% today. So this thing has been having 2 and 3 and 4% days. Be very, very cautious trading it. Do not use as much leverage on this because it really can get going really quickly and can hurt that P&L or the overall account's equity. The high probable trade for me is done on this. I wanted to see a push up. We got to push up so it can hold as resistance. You might trade higher because you're not anywhere next to your fibs, and people are going to be watching the fib levels. You can see there is your 50% and 618 retracement levels from the main decline. So there's price could trade up to there, right? But I'm not looking for it to happen. I'm just saying it can. So we'll keep that there. See how it goes. Good morning, everybody. Connect 8 November, 8 close before November 14 close, and 3rd August close with 28 September. Thoughts? All right, Danny, let's go to Bitcoin and I'll check out what you're saying. All right, so you said connect November the 8th with November the 14th. November the 8th to November the 14th. All right, what was the other one? And 3 August 3rd and 20. Let's see if it does hit August 3rd. All right, so you're looking for some sort of a wedge. August 3rd to Sept 28. Why did you use Sept 28? All right, so here, Danny, this is just what I'm about to tell you is just my opinion, okay? Please don't take this the wrong way. Please don't take it as if I'm saying anything negative about you or this. But this is my opinion. This is wrong, right? Simply because you have wicks through this trend line. Now, on this one, you started it from the low, and on this one, you attacked it to the open or the close. So that really doesn't give me a baseline to work from, right? Not a specific, almost exact base level. What I do is I use the wick highs or the wick lows because that encompasses all of price, right? No price has traded through that level except this, but that's okay as that was a capitulation wick to the downside. So that would probably be more along the lines of the trend line I would look at. And for up here, I'd do the same thing. Now, two different ways you can do this one. There are about 30,000 trend lines you can take from just this section of price alone. Trend lines are ultra uber subjective. They're in the eye of the beholder, right? Horizontal price levels, resistance, support, heat levels, supply and demand, those are all objective levels, not subjective. That's why we use those levels. But we can use trend lines to help us get a bias, a short side bias or a bullish bias. So if you use this one, it's a very parabolic downside trend line. You did not close above it until here. So yeah, technically you can say you have a breakout on your hand. But if you use this one, you still have a breakout on your hand, right? Then you can use this one and you haven't broken out of anything. All right. So this is the way I want you to look at Bitcoin. Bitcoin did not break out, right? You did get a daily close above daily resistance here. So that is technically a breakout, right? There's your close above, close above. This one traded lower, but you closed back above. There's your failure. This is showing you that it's failing. But if we just go to the 12-hour and put this up here on the 12-hour resistance, you can see that you never closed a bullish candle above 12-hour resistance, which means your breakout was a trap. It was a trap, a bull trap. You did not break out. You didn't break out of anything. The 12-hour resistance held price. Price has rejected, and now you're back down to 12-hour support. There. You see what I'm saying? Those are two static levels. They will not change. They're not my levels. I did not make the levels. Price did. The market did. So that's why we use those levels. It gives us exact price points to watch. All right. So currently you have not closed a 12-hour candle below your 12-hour support zone. So it is holding, but I would expect it. I would expect it to take out that weekly swing low. That's it right there. That's the weekly swing low. That is my bearish target. So to me, price can trade all the way back up to 47, 246.40 and roll over, right? It could go higher even. It could trade all the way up to 47, 752. But I am looking for this level to be hit. It's just you get there, you don't take it out, then you trade away, then you come right back to it. So this is my target. Once that target is hit, then we'll let the market decide what it wants to do from there. But I mean, technically, you can say that you have broken out of a downtrend. What's that guy's name on Twitter? Jesse, the new guy, been trading or looking at charts for a little over a year, told me my trend line was wrong. Or didn't really say that it was wrong when I had it like this. He wanted me to use this one. So if you use this one, you did get a breakout on Bitcoin, but you traded sideways and got the breakout. So your trend line's not a really good effective trend line if just sideways trading breaks you out of it, right? If for it to break out, you want to see it break out, like and show us that bullish strength. But you didn't get none of that. You got it a little bit here, and we traded it all the way up to it. Once it got up there, then it just disintegrated. That shows us that there's more demand or supply in the market than demand. So now what I would do is I would just tack it to this trend line here because it's new data and the markets are always changing and evolving, and so do we have to be. So now, if you get above this on a 12-hour closing basis, you legitimately have a breakout from this trend. All right. But it is a wedge. I mean, it is wedging up from this stuff over here. We'll use that and this. You definitely are wedging up, but that's what I would probably, how I would look at it. If you're waiting to trade this as a breakout or a breakdown, that's how I would shape them up. All right. That's just my opinion, though. Once again, I could be absolutely wrong. Your way could be the way, right? The right way. Good morning, Bradley Bear. Good morning, Fellat 10. Good day. Hi, brother. I learned a lot from your channel. However, I cannot watch these live due to work. I catch on the evenings. Please, can you chat about WTI in your sessions? Absolutely. I don't trade oil, so I don't chat about it unless someone asks me specifically to look at it. All right. So we'll look at it. Like I said though, I don't trade it. It's just because I don't have a brokerage that allows me to trade CFDs. We can't trade CFDs in the US, so I would have to open up an actual legitimate broker to trade this, a futures account. And I already have so many trading accounts. I don't really want another one. I have stocks accounts, Forex accounts, multiple crypto accounts. I mean, I don't need to trade oil. So oil had a lot of downside. It's trading up here, making super duper pooper scooper highs, and then boom, falls down, held support, and you're getting a bounce. In fact, you didn't even test it. You did test the demand zone, and it was all you needed was 1 day. So you traded right down into that. That was a rejection, and you are seeing bullish price. I don't know how this thing trades with dollar, but I have heard some older traders say that generally whatever dollar does, so goes oil. I don't know if that's true or not, but if the dollar goes up, then if oil is regarded or trading with the dollar, which I don't see it in the charts, it's definitely not correlated in price action. But yeah, I mean, it's definitely bullish. You are coming into resistance, a resistance that held. But since you're back into it with like what the S&P 500 did, I'm thinking this is probably going to break out or at least trade up to your next daily resistance, which is going to be 78.49. That would be the next spot that I would potentially look for targets. And that is, of course, if you do get a daily close up of 76.73. So right now, the near term, like intraday trading targets would be those wick highs, today's high, and then those wick highs. So let's go see what the intraday price action looks like. You're at work, so you're probably not going to be trading the intraday price action. Yeah, it's difficult. You took out the swing low on this range, and now you're trading back up to the swing highs. So potentially look for a breakout on oil. Hourly res is there at roughly 77.05. But that's really not going to matter if you're swing trading this looking at dailies. Let's look at the week. Yeah, I mean, it's bullish, right? You're trading as an inside week, so if it breaks out, you're going to have bullish continuation. That 78.49 is daily resistance. So what you could potentially do is wait for that level to be tested, then look for a pullback on oil. If you want to look at this as a near-term downtrend, you can. You absolutely can. 1, 2, 3, 4, 5, 6, 7 weeks of complete downside. There's not really any trend lines to deduce from this. I mean, there was. It's broken. But let's fib it, right? Because fibs will at least let you know where you stand in regards of that. So you're into a potential resistance zone. If this bearish price action on oil is going to continue, and when I say this bearish price action, I mean this stuff here, right? Just this swing low, this swing. If this is going to hold, then you're potentially buying it into resistance, into the high. So once again, let a daily trade up above, let it come back in and test for support. If it holds support, then you can look for bullish entries, looking for the swing highs ultimately. But it is in an area where it potentially can hold as resistance. In fact, a lot of people are probably getting short here because of the retracement. And you can see, like, on the daily, man, it's just, they are treating it as such, right? 618 is there. So either let it break out above and come back in for a retest as that, if that holds as support, then you can look to get long. If it fails here, then for the next several days, 2 weeks, we will have a short side bias on oil. But right now, it's in pullback mode. It needs to get above the 618 to basically confirm bullish breakout. And I mean, it can always trade higher and then break down, guys. Technical analysis is not an absolute 100% science. It's just what we have. That's all we have. So hopefully that helps. Hey, mate, what about retest of May dump 29K? Could be back there and then take off? Yeah, it could. I think if the bull market's over on Bitcoin, you're probably going to see a lot of downside and sideways choppiness, right? Markets rarely trade. They do a lot more trading sideways and chopping than they do when trending. So, I mean, is it possible that we break down? It absolutely is. Getting down to 29K, there's a lot of people that would disagree with that. But, I mean, if you just use... See, this is what changed my mind on Bitcoin. Let's just do this. The monetary policy, that's one thing, right? That's the main thing. The new monetary policy that we have. That's huge. But that's the wrong tool. This is what changed my mind on Bitcoin. So basically, if I go to the weekly, you can see that it's not even in the right spot. There we go. There. So this was March 2020. This was, the pandemic, the start of it, the closing down of the economies and everything. And then this is when the Fed instituted that uber bullish monetary policy where they dropped interest rates down to almost nothing and they started buying asset purchasing plan. That's why you got a massive bullish push. I made a kind of a spoofy type of video on my smaller channel talking about this, all of this. If you guys want to check it out, maybe one of my mods can drop the link in the description. But it's a joke, but it has sincerity in it, all right? Once we lost this bullish trend line, this is what I call the March 2020 and let's just say the 2020 and 2021 bullish trend, right? This trend line encompasses all of the closes until here. So something has changed, right? When we got down here, look what happened. Remember, B-Word podcast news event happened in a very key level. So when you couple those two things together, you get confluence. Bullishness occurred. Come back into it, tested it again. It held. Now there's your breakdown. Not only did you break down, you retested that area and boom, you're down. So we may not get up to 55K. This may have been it. This could be it. 52,029 could be the high for a very long time. For at least 2 years. I mean, if it's over, it's over. There's nothing you can do about it. There's nothing I can do about it. So we'll watch that trend line. Price has to get back above it to show me that it's bullish. As long as it's below that trend line, I'm looking for shorts. And it's as simple as that. But what did you say specifically? The retest of the dump of 29K. I mean, anything is possible. Is this 29K? Yeah. So you're talking about that wick low. Yes. It is absolutely going to be a bearish target if price continues making lower lows and lower highs. I would not reach for that target, right? Because it could take months to get down there, if it even gets down there. Bitcoin can trade sideways in a range, guys, from 36,000 to 58,000 for the next 24 months. Okay? It doesn't have to just go up or just go down. It's probably going to do a lot of this. A lot of this right here. Look for this kind of price action. It's okay if you want to accumulate Bitcoin, but if you're going to do that, I would suggest you do it at lower prices. because you're probably going to see them. In my opinion, though, I can be wrong. I have to say that. I do not know what it's going to do. But it has broken down from the bullish trend line. And that bullish trend line encompassed all the price. I've posted this on Twitter. I mean, it's out there. People don't want to hear bullish price action, right? You post something on Twitter about how bullish Bitcoin is, it's going to hit $40,000 or $400,000. You'll get 150 likes and 27 shares and 47 comments. You say Bitcoin's going to make lower prices, you get 12 likes. That says everything, right? That's and when it's like that, when everybody's bullish like that, it's time to step away. Everybody's so blindly bullish on Bitcoin right now, they're actually saying that there probably won't be another bear market in Bitcoin's history ever again. It's just going to go straight up. When you start hearing ludicrous stuff like that, it's time to get worried. In my opinion. But yeah, we can absolutely get, if it gets down there, we can test that low. I wouldn't look for that. There's other bearish targets to look for first, right? You have this capitulation wick low, which we haven't taken out yet. You got this one down here, which we didn't take out yet. So those two have to fall before this one even becomes a part of the decision or the communication. While we're not even around it, there's no point in even talking about it. That's just trying to look into the future. But if Bitcoin drops 80% like it did, you're going to see prices back down to 14K. I don't know that it's going to drop 80%, but if it does, you could see that, right? So let's look at this real quick, and then I'll shut up with the bearishness. I'm not bearish, though. I mean, I'm going to take bearish entries, but I'm bullish on Bitcoin. I think Bitcoin's going to be worth $1 million in 10 or 15 years. So the lower Bitcoin goes, the more happy I get. That means I get to buy more. But I mean, there's that. There's resistance there that didn't get retested. So I mean, a bear market push down into there. I don't think Bitcoin gets down to $13,000, but if it does, I'll buy it hand over fist down there. Hand over fist. But a lot of people think the bear market lows will be around 40K, right? That's about where Michael Saylor's cost basis is. Elon Musk's cost basis is at like 37K. So people think that'll be the bear market low. And I can agree with that. I mean, 40K is just here. And we'll see. We don't know what's gonna happen, man. The only thing that we can do as traders, and when I say we, I'm talking about all of us, is look for high probable areas to take high probable entries. We don't know if those entries are going to work or not, ever. But that'll help your trading out a lot if you just do that. Just my theory for Bitcoin, Asian has been selling. Asian will be buying back at a higher price. Obviously, no one knows, but that's what price will do. Or no one knows what price will do. Yeah. Yes, he does, Wes. He's very hungry. Very hungry cat. What's up, Quinn Dizzle? Sorry, guys. The chat just flipped out on me. There we go. Get short Euro USD, says Eddie. Pepe is in short Euro USD. Short max leverage. Good morning, Heath. How can I be a better price action trader? Currently trading stock options. You just follow your open, high, low, and closes, guys. That's what people did back in the day. That's what you got to do now, right? Daily highs, low, opens, and closes. Those are fantastic levels to watch for potential entries. It just takes time. You can watch. I got 100 videos on this YouTube channel that all talk about the same thing over and over again, and eventually you'll get it. And then it'll be up to you to make the better decisions. But it is possible. Keep up the great work. Thank you, Quinn. Good morning, Janet Swift. That December 4 wick low is different on all exchanges. We can't use that for a trend line, right? That's a thing, right? That's the thing with Bitcoin. Every exchange is going to have different prices because the market makers have not arbitraged that edge out of the market yet. If Bitcoin keeps growing the way it is, keep in the mass adoption that's happening, then eventually I would say that your exchanges will have a lot closer spot price because market makers will eventually spot arb that edge out, so to speak. But right now you do have multiple different prices on multiple different exchanges. I take my positions on KuCoin. So, KuCoin has really close price action to this. I could look at Bitcoin USDT on KuCoin and analyze price. But when I'm doing it for like the community or the public, I just use the Coinbase data feed. Right? But it's really simple. There's KuCoin. Real similar. KuCoin's capitulation wick low is $40,589. So this will be the first target. And that's if we reject, or if we don't reject from this, taking out that weekly low. 45,425.60 is the price on KuCoin. That's the last area to take out. So what I'm saying is once that area gets taken out, Bitcoin doesn't have to trade down to this low. Once this area gets taken out, Bitcoin can then turn around and do something similar as to what it did over here. But it will only do that if demand comes back into the market. The crypto market lost $1 trillion on its market cap. All right, that's gone. That has to come back in order for Bitcoin to rise, right? Or at least Bitcoin's market cap. That money has to come back into the asset. If it stays out of the asset, and furthermore, if more people start selling, then it's going to go lower. It's about supply and demand. The halving helps Bitcoin's supply and demand, and that's why the asset only goes up over time, but you do get bear markets in Bitcoin. Every time it makes a bullish rip, it has had a bear market. And this year, it made last year and the beginning of 2020, the end of 2020 and all of 2021, Bitcoin had a massive rip. Look at the size of this bullish move compared to all of these bullish moves. It's nothing in comparison. This was a massive rip. Massive. Huge. So, where does it find a low? That'll happen probably later on in time. I don't think it's going to find a low just yet. But what I'm saying is once it sweeps those lows, it can absolutely trade back up. That's why I'll be looking to get short around 55K-ish. 55-ish. Somewhere in here. Looks fine to me. That's just a near-term target. Bitcoin's trading sideways. Definitely is. Right. It's got to get out of this candles. Yes, you're right, Wes. It is range bound and sideways. This is your candle. That is your range. It's inside of it. Until you get above this high or below this low, you are still inside of this range. Yes, you are sideways. XAG and XAU. Let's go look at it real quick, and then I have to drop off. I probably already dropped off with this bad connection. XAU USD. Big move yesterday. That's because of the dollar. So everything I said about gold going higher potentially is, the dollar looks like it's wanting to make a run up. Gold looks like it was attempting to test demand or supply, but it didn't make it up there. You're just currently, you're trading in an old. I would probably go use something intraday to find out what caused this thing to stop there. That was a big bearish candle. You took out support to the downside. Look for that to continue. At least look for some continuation. Probably not today, because usually when you have a big move like that, it takes a day or so for the market to digest it. Once the market digests the big move, boom, then you get your next move. But as long as you're trading underneath this bullish close, I would probably be looking for bearish entries. Because if the dollar continues up, this is probably going to go lower. And then silver. I mean, it does look like it has found a bottom, though. Right? Longer term, it does kind of seem as if though it's found a bottom. And though there isn't, let's see, what does that daily demand do? No. So let's use this support. Let's use this support since that was just this was a bear trap. So we won't use the bear trap. We'll use this support. So anything down there could potentially be a buying opportunity. But you're in the middle of this range too, right? You don't want to look, I mean, if you're looking for trades in here, it's going to be a lot less higher probable than, say, taking trades on the outsides of the ranges. If you expect the range to continue, that is. If you get a breakout, then look for bullish entries maintaining the breakout. But right now, it looks like you're seeing a bit of rejection. Yeah, that's all it is. Massive rejection. This is a dead cat bounce, probably. So look for bearish continuation. 1729 is when I start to get interested on gold again. And then silver probably looks exactly like that. No, silver looks worse. Silver is on the lows. There's silver. So you took out that support to the downside, broke out, but then you came back in and retested it again. So that support is valid. It was a bear trap the first time it was tested, but the second test confirmed it as support. So you're... Man, this one's difficult also because you didn't take out daily support to the downside. There's your daily downside. You didn't close below it. So the weakness, even though it looks weaker today, I would say this will probably get a bounce. This one did test daily supply, though. Yeah, I wouldn't be looking to take short entries on silver because you're into potential support. But you closed the 4 hour below it. So yeah, you could target the low. This is going to be your low. That's the target. But there's probably no entry now. The entry was up here. So, I mean, it can just... Man, it's difficult. It's in a range. I'd leave it alone. I don't like it. If dollar is strong, then look for short positions on gold and silver. But they may find support, though, ultimately, if the inflation rate keeps going up or maintains its position. The inflation numbers are important to watch from now on. Because we need to see if they start to go lower. If the inflation rates start to go lower, then gold and silver could get sold off. If the inflation rate stays high, even though you're getting dollar strength, you can see gold and silver start to rise. But the inflation rate would need to get much higher, probably. Because also, remember, gold met all-time highs back in August 2020. So gold and silver was ripping back then. So, yeah, it'll be a while for you to see another rip like that, probably. All right, guys, with that, I have to close it out. If you have any questions or comments, just drop them down in the comment section after YouTube gets done processing this video. It'll probably take a while, though, because I'm dropping so many frames. But yeah, just leave it down there as I try to answer all questions. Thank you guys so much for being here. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.